Have you ever wondered how the ultra-wealthy seem to multiply their fortunes, often behind closed doors? What if I told you there's a hidden market? A secret playground where fortunes are made long before companies ever hit the public stock exchange. This is the world of pre-IPO investing, and it's where the truly big money often begins. Welcome everyone to a deep dive into an investment landscape typically reserved for the elite. We're going to pull back the curtain on private market access and understand exactly how wealthy investors position themselves for potentially enormous returns. It's a complex area, no doubt, but the rewards can be monumental. Imagine getting in on Facebook, Google, or even Amazon years before their initial public offering. Think about the exponential growth and the incredible wealth generated for those early investors. Stories like these are not just financial folklore. They represent the real potential of pre-IPO investing. But here's the critical catch: the immediate tension in this high-stakes game. Accessing these opportunities is not as simple as opening a brokerage account. The private market is notoriously exclusive, guarded by significant barriers to entry that keep most retail investors out. We're talking about a world of intricate connections, substantial capital requirements, and often highly specialized insider knowledge. This isn't just about having money, it's about having enough money and being in the right circles. The capital commitments are often high, meaning a casual investment isn't an option. Furthermore, personal relationships and network access can often dictate who even gets a seat at the table for these coveted deals. Now let's talk about the discomfort and uncertainty that even seasoned investors face in this arena. While the upside potential is electrifying, pre-IPO investing comes with its own set of significant risks. You're often investing in early-stage companies, which, by their very nature, have a high failure rate. These aren't established giants. They are ventures still proving their business models. Liquidity is another major concern. Unlike publicly traded stocks you can sell at any moment, private market investments are illiquid. Your capital could be tied up for many years with no easy exit, waiting for an IPO, acquisition, or secondary sale that may or may not materialize. This requires a long-term perspective and the ability to forego access to those funds for an extended period. Valuing these private companies also presents a unique challenge. Without public financials, market comparables, or analyst coverage, establishing an accurate valuation can be incredibly difficult. Information is often less transparent, relying heavily on due diligence that can be harder to perform than with public companies. You're essentially betting on future potential without the same level of verifiable data. The very lack of public scrutiny means investors need to perform exceptional due diligence. You must dig deep into the company's financials, management team, market opportunity, and competitive landscape. This is not a passive investment. It demands thorough investigation and a high degree of confidence in the venture's future. So how do wealthy investors navigate these barriers and access these exclusive opportunities? There are typically a few main avenues, each with its own set of requirements and costs. The most common entry points are through private equity funds or venture capital funds. These funds pool capital from many accredited investors to make investments in private companies. However, accessing these funds isn't cheap. They often come with very high minimum investment thresholds, sometimes in the millions, and charge substantial management fees and performance fees, known as carried interest. While they offer diversification across multiple private companies, that access comes at a significant cost, reducing your overall net returns. Another pathway is direct investment. This is often the most exclusive and lucrative route, where an individual investor directly invests in a private company. This usually requires an exceptional network, established relationships, and often a track record of successful investments. These direct deals are typically only offered to those within a very tight circle of influential investors. The conflict here is clear. The most desirable deals often require the highest capital commitment, the most robust network, or the deepest pockets to pay the associated fees. It's a system designed to funnel the most promising opportunities to those who are already wealthy and well-connected, further exacerbating the wealth gap. The exclusivity of direct investing means that many opportunities are found through personal connections, private pitch events, or through established relationships with venture capitalists who might offer a co-investment opportunity. It's less about finding a public listing and more about being invited to the table. This underscores the importance of building a strong professional network if you aspire to participate directly. Now for the payoff. Understanding how you, too, might gain exposure to this world, even if it's through indirect means. The first step is to genuinely understand the accredited investor requirements. In many jurisdictions, this legal definition is critical for participating in private placements. Generally, it means meeting specific income or net worth thresholds, excluding your primary residence. For individuals, achieving accredited investor status is the gateway. Once accredited, you open up avenues to specialized private market platforms. These platforms act as intermediaries, connecting accredited investors with private companies seeking capitals. However, even with these platforms, robust due diligence is still paramount. Not all deals listed will be winners. Platforms focused on private equity or venture capital opportunities can be a starting point. Some platforms offer access to secondary markets for private shares, allowing you to buy shares from existing investors before an IPO, potentially offering earlier liquidity than traditional direct investments. Others focus on specific sectors or stages of company development. It's crucial to approach these platforms with caution and a critical eye. Just because a deal is listed doesn't mean it's a good investment. You still need to thoroughly research the company, its financials, management team, and the terms of the investment. Education and careful analysis remain your most powerful tools. Always remember the golden rules of investing: due diligence, understanding the risks, and diversification. Never put all your eggs in one basket, especially in such a high-risk, high-reward environment. Allocate a small, carefully considered portion of your portfolio to private investments that you are prepared to lose if things don't go as planned. This type of investing is not for capital you can't afford to lose. Diversifying across various private investments can help mitigate some of the inherent risks. Instead of betting on just one or two startups, spreading your capital across several ventures or through a diversified fund can improve your odds of success. It's a marathon, not a sprint, and patience is a virtue in private markets. So, while the pre-IPO market has traditionally been the domain of the ultra-wealthy, new platforms and evolving regulations are slowly opening doors for more individuals to gain exposure. The potential rewards are immense, but the complexities, risks, and barriers to entry are equally significant. This isn't a get-rich-quick scheme. It's a sophisticated investment strategy requiring careful consideration and expertise. If you found this deep dive into private market access enlightening, please give this video a like and subscribe for more insights into sophisticated investment strategies. We're constantly exploring the hidden corners of finance to empower you with knowledge. In our next video, we'll break down the precise financial requirements and other qualifications needed to become an accredited investor in detail. Don't miss it if you're serious about exploring these opportunities.